Category killer Netflix. Back in 2014, they were the only streaming service. They came after the marketplace and hit them with a vengeance. Let's take a look at what the numbers look like back in 2016, however. And here's what we want to point out. Take a look at the margin for Netflix. Net income margin, just 2%. And the free cash flow in 2016, very, very negative. The bear case for this was that they were not charging nearly enough for how much content they had. Let's take a look at what happened to the stock in the future to see who won, the bulls or the bears in this argument. So who won here? The bulls definitely won. Netflix had a great COVID period, but then right in the middle of 2022 when the market sold off, Netflix sold off incredibly hard. They weren't losing users, but they weren't growing as fast and they weren't pushing prices hard. And then in the last couple of years, the stock has done fantastic. A 4 to 5xer from about 200, now trading about $900. Let's take a look at today's numbers as to whether this can be held or should be sold up here. So let's start with what Netflix did right. Remember that 2% net income margin? That currently 22%, right? How about that negative free cash flow? It's very, very positive. How did that happen? Two reasons. They raised price, which helps significantly, but the big reason is scale. $8 billion in revenue went to $38 billion in revenue, and when you buy that movie, you can amortize that over far, far more people, which creates far, far more cash flow. That's what they did well. Let's take a look at the numbers today as to whether it's viable. This stock is not cheap. It is growing, however, but let's take a look at metrics here. Take a look at PE currently, 45x PE compared to 22 for the market. Very expensive. Let's look out to 2026 though and compare those numbers because it's going to grow. We get 31 PE, kind of expensive. We also get an EV to EBITDA of just 22 times and a free cash flow yield of about 3%. None of these are terribly expensive, but here what you got to think about when you think about whether or not you want to pay this multiple or you want to sell this multiple back to the street. Competition. Good news for Netflix. They probably still have some pricing power and some growth from that pricing power within the model. Here's the bad news for Netflix though. The last decade's competitive structure compared to this decade's is far different. Amazon, Google's YouTube, Apple, all of these folks are in this streaming service business, and Netflix has to go up against them for all of this content. That is going to make it far more difficult for Netflix to grow users, for Netflix to raise price, and at these multiples, this is just too rich for us, given the risk and reward of all of these things that could happen essentially in what is a streaming war, not a streaming oligopoly like it was a decade ago. Hit us with questions. We love everything that's coming at us. We appreciate everything you guys do for us on social media, the likes, the comments. If you want to see anything, let us know. We'd be happy to help.